What is going on, everyone? Hope you're having a great day today. Please, please, please subscribe if you have not already. I see everyone that had subscribed in the last week or two. I appreciate it so much, and it allows me to, feel good enough to create these kinds of videos and just keep this train rolling. So please, please, please subscribe if you have not already, and welcome to my videos. So, as you can see right now, today is February 17th, 2021, and in real time, this is the share price of Apple. So, what I want to go over today is how do you value a company? Obviously, before you buy a stock, a share of a company, or of a business, the most important question to ask is how much is that business worth? Is it worth investing in? Is this company as good as it looks like or as terrible as others might talk about? So that's the most important thing because you don't want to invest in a crappy business. You don't want to invest in a bad business that just so happens to, be worth a lot. At what valuation are you putting your money into the company? And could you expect that company to grow its value in the next few years? Could it get higher? One thing that venture capital people do is invest in companies in their seed and Series A, B, C, and down the line rounds of finance. What that means is a company is valued at its lowest during the seed funding. You might get $100,000 with a 10% stake at $100,000, valuing your company at $1 million. That's how you value a company. So in that case, that company, you're giving them 100,000, saying that they're basically worth a million based on how much you're getting in return. Well, it's the same thing for any individual investor for something as big as Apple, you know, 30 plus years after its IPO, after it initially hit the market and there was no more seed funding and, Series A and Series funding. So, anyway, this is just a long story getting into how do you value a company? And I just picked Apple, and we'll look at the income statement too. But I picked Apple because it is the one of the largest companies in the world. And this is a Yahoo Finance page. And as you can see, at the low in the pandemic, Apple's enterprise value, which is what we're going to go by, was worth about $1.1 trillion. Is a company worth, would you say, $1.1 trillion? And if you put your money into Apple at its valuation of $1.1 trillion back in March 2020, you would expect that that money would grow, that Apple is actually in a pandemic, a good enough company that it should make it through, and it's already valued at over a trillion. I'm going to put my money, I'm going to invest, in March 2020, expecting that it actually is higher. This is a down stock, this is not a sustaining trend. That Apple will break out of it and will still be a successful company months, if not years down the line. And if you had that thought process of investing in a great company at a lower valuation than it was even, the 3 months before, you would have been correct. You would have, no crystal ball needed. You would have correctly guessed and guessed right on the value of a company like Apple. Because then, again, less than a year later, about 9 months later, you see that the company's enterprise value as of 12/31/2020 grew to about 2.25 trillion, meaning you basically doubled your money if you had, or like you doubled your investment if you had invested on the 31st of 2020 into the 31st of December 2020. So that means that yes, you are investing in a growing business. The company value is growing and that is sustainable. Obviously the market, took its upswing and it valued Apple correctly at a $2.25 trillion valuation. Now the question is, when you invest more here or first time or whatever, can you expect Apple to grow? Can you expect Apple to continuously, be worth that investment? Is Apple really worth 2.25 trillion? And so far, as of today, the answer would have been yes. It grew to, as of today, again in February 2021, about 2 months later, it grew to about 2.31 trillion in enterprise value of the company. So that's how you should be investing in a company. Is I forget about, price to earnings ratio. Forget about that. Is this company currently worth that amount of money based on, like revenues and things like that, things that consistently grow and grow easily, um, or should be growing easily. So with that, I just wanted to leave it at that, and